Rakesh Sharma, Executive Director with Bajaj Auto, joins us now. Let's take our conversation forward with him. Mr. Sharma, good morning. Thank you for joining us. Things are looking up, sir. Margins are better. Market share gain is picking up. The impact of commodity prices clearly seems to be behind us. So looks like after a mixed 2022, you are in for a decent and a strong 2023.
Yeah, morning. Indeed, things are much better than what they were 6 months back, both from the point of view of the demand coming back. There was a reasonable festive, there was a little dip after the festive, but now it does seem that the industry, after a long time actually, will be in the positive zone for the coming, let's say, 12 months. The three-wheeler business is also coming back rather nicely. It's almost back to its pre-COVID levels, and penetration of CNG has improved. So where we enjoy a very, very high market share of 80% plus, it's a very profitable segment. So that's come back rather nicely. We still have some headwinds, as you know, in the international business, thanks to the volatility around the dollar. Both the devaluation and the availability of the dollar is a big handicap for international business. And in one of our largest markets, Nigeria, elections are coming up. So that's usually a tumultuous period for Nigeria. So we are looking at about probably 3-4 months more of an unsettled scenario in the international markets.
So could it be this versus that? When I say domestic will pick up, export will remain subdued, net impact would be neutral?
Yeah, it's difficult to be precise about these things because the one upside on the international side is that we keep gaining a little bit on the soft devaluation of the Indian rupee, which is happening. So that keeps adding to the bottom line. Some of the markets like Latin America, where we sell premium products, those have started to respond well. But overall, you're very right. The international business outlook, at least for the next 4 months, will be down. Domestic will be up, but let's see whether they are completely able to offset each other.
Please say that worst of the margin pressure is behind us, and if commodity prices come down, you're not going to cut prices, which means that the price hikes which you've taken will be retained, and that will automatically boost your margins now?
Yeah, I suppose so, but there are some indications on the aluminum side, etc., which is suggesting that there might be some uptick which we will see. So we will wait and watch, but generally it's a steady situation right now.
Touch upon the domestic situation, but I want to delve into it a little bit deeper. Given the fact that we've seen the demand for the 125cc and above that remains steady, the entry segment demand is a little bit tempered in comparison. So, any green shoots that you're seeing?
See, overall, I think that the industry has moved up quite smartly in the last 2-3 months. I'm not saying that it is rocketing up, but it is like a gentle positive, single digit positive. And hopefully, as the mini season in the north unfolds in April, May, it will move up further. So the entire industry is moving up, which includes the entry level. But if I divide the market between 125cc and above, which is almost now 50% of the Indian market, and the lower half, then the upper half is outperforming the lower half by 3 or 4 times. So that is the kind of difference, and that is the reason why the 125cc plus segment, which was a couple of years back in FY20 about 45%, is now today 50%, and this is a trend we see that as continuing. So the entry, which is the first motorcycle or the most affordable motorcycle, that segment is indeed, trailing way behind all the other segments.
Okay. You gain market share, and is this a function of any scheme, new launches, or this is pure on merit?
Well, everything is on merit. It's just that, which type of strategy and tactics one deploys. Uh, we have not run schemes really even through the festive to now, because our whole approach has been in rejigging our portfolio. And if you see, our flagship brand Pulsar is gone for a complete makeover, which started in somewhere in June of last year when we launched the new platform with the twin 250 cc's. There were two models of that, and then there was a 160, and then there was right now a 150 cc. So the entire thing is completely changed, and large parts of that portfolio are very, very happy that they've got excellent traction, and we think they're getting more youthful and newer customers to the Pulsar franchise. We had also extended the Pulsar brand, and that exercise started 2 years back with the 125cc, where we have got a three or four models to suit different kind of tastes. So now, if you see from the 125cc to the 250cc, that spectrum, we've got 20 models over there, and I think the nearest competitor has 13 models. So because of this, we are gaining share and gaining traction, new customers in geographies where we have been weak, in sub-segments where we have been weak. And this has also resulted actually in the improved ASPs and slightly better margins. So the contribution of to our EBITDA margin, a lot of it, I would say about a third of it, is also driven by the shift of our portfolio to the upper half of the segment on the basis of new products. We have also recently launched the Platina 110 with an ABS, which is the first of its kind at that level in the world. And this is an attempt with a very, very solid feature and a very solid proposition, which is top of the mind for every commuter, which is safety, and to upgrade the customer on that basis. So the approach has been very, very heavily product-led with solid propositions where there is something which is very, very differentiated and unique, which we can go and engage the customer with. So I would say that the market share gain and the margin gain both have been driven largely by a product-led strategy.
Which markets always look forward to is that what is the product pipeline for any auto company, whether it is four-wheeler or two-wheeler. So for 2023, what is your product pipeline? I mean, how many new launches, new platforms, new variants would be at play?
Well, I obviously cannot be very precise about it, but this pace which we have been maintaining over the last 1 year, which you see that every quarter there is a couple of new products which are introduced. I can tell you that this is going to continue. This is going to continue right from the entry-level commuter end, and right up to, I would say, including the Triumph brand, which hopefully in the next fiscal will make an appearance. So it's a very rich product pipeline. That's the theme of last 1 or 2 years, where we were working on products, and that will find expression as we go forward in the next fiscal.
In 3 years from now, do you see electric vehicles or electric two-wheelers having a significant and a dominant presence on Indian roads? I mean, there was a time when we discussed EVs in the four-wheeler space. There was a lot of yes, no, I don't know kind of a narrative. I live in Mumbai, and every time we go out, we can see cars with green number plates now. Do you see that phenomenon could be at play even with two-wheelers? It could not happen this year, but it surely will happen in 3 years.
So you're talking about two-wheelers or three-wheelers?
Yeah, I'm talking about two-wheelers and three-wheelers. I mean, three-wheelers the migration is evident, but for two-wheelers, do you see electric two-wheelers having a dominant market share in 2-3 years?
No, I think that the whole migration is actually far more evident and stronger in two-wheelers, particularly if you look at it in the context of how in scooters. Now, almost 20%, I would say in December and Jan, if you take the latest numbers, 20% of scooters is high-speed electric two-wheelers. And this is an average. So there are certain cities where it has gone up to 40, 45%. And this is a very high level of penetration. Of course, it is tapering down if I compare it with 6 months because of the base effect. But I think the customer has made it's seriously, a two-wheeler is in serious consideration whenever a customer steps out for purchase. And the driver for this migration is, of course, the petrol price crossing 100. I think that was an inflection point. But the driver remains to be a very functional reason. It's a very economical reason, primarily, the savings. And, of course, the convenience of not going to a petrol station. So this is a very strong driver. Now, the only thing which can drag the party down is the cost and the subsidy, because we all know that this proposition, which the customer is finding economically very attractive, is supported a lot through subsidies. And I doubt if anyone expected that there'll be such a boom in two-wheelers. The subsidy bill has obviously increased, and we are waiting to see if that continues. And on the other hand, the cost of the raw materials, which had been primarily lithium-ion based stuff, which had been declining for about 5-7 years, thanks to the demand and supply imbalance, it has started to rise. So if through a combination of rising costs and reduced subsidies, if this proposition, the economic proposition, gets dented, then this adoption might slow down. But at this point of time, the adoption, the cannibalization of ICE scooters is very strong. It's very strong in a few places which have reached maturity, and it is unfolding. In three-wheelers, it's a very different segment where people are not using it really for personal purposes. It's a completely commercial game. And there is CNG. The economics of electric versus CNG are not so strongly in favor of electric as it was in two-wheelers when you compare it with petrol. And the government has done a fantastic job in spreading the CNG network. Now, 50% of the country is almost covered with the CNG network. Another 4,000 pumps coming in the next couple of years, which will take the coverage to 80-90%. The three-wheeler driver is very familiar with the operations of the CNG. They don't have the same anxieties of range and all those things. And the adoption of CNG three-wheelers away from diesel three-wheelers happens very, very easily. So the issue of range anxiety coupled with not such a big economic differential is causing the migration in three-wheelers to happen at a lower rate. So we have to go and work on the drawing board, make the proposition stronger on both fronts, the economic front, as well as the issues like range anxiety, which in a commercial situation becomes very, very important. We have to do that and then go back to the customer and make sure, and hopefully then that will drive the transition.
Appreciate your time. Thank you so much for joining in, Mr. Sharma, and giving us highlights on business and how the industry as well is operating. We'll take a very short break. Stay